This is the monthly chart on Snowflake. Price is currently at $151.10. That is down more or less 60% from the highs of 400 plus, where it did form a double top between 2020 and 2021. Before we continue with the analysis, let's get into this article. It is coming from Market Beat. It's titled 3 Reasons to Love Snowflake, 1 Reason to Be Cautious. So having rallied as much as 60% since the start of the year, Snowflake has been taking a breather for the past month. Shares are down 20%. And while some bears are calling for an even greater dip, the website anyway, sees more reason to like Snowflake than to hate them right now. So you got number 1, AI partners. First was with Microsoft, with Snowflake announcing they were expanding their already existing partnership on both the collaboration and go-to-market fronts. Snowflake is going to be one of the Microsoft's key partners when it comes to delivering their large-scale generative AI products, a lucrative position to be in given Microsoft's leading place in the AI industry already. The second partnership is with NVIDIA, although the details are still sketchy. All right, bullish comments. So Morgan Stanley reiterated their outweight rating on Snowflake shares on the back of the same investor update that announced that NVIDIA's partnership with a price of $215. That's roughly a 40% increase from current levels. And then you have another analyst on Wall Street, Oppenheimer, also sees Snowflake's prospects as having grown considerably brighter this year, with their 2029 target of $10 billion in revenue, significantly more obtainable now versus a year ago. The company's still not profitable, and that is the fact that the company is still not profitable. Even the more, so here's the one reason to be cautious. The company's still not profitable. Even the most ardent bulls will struggle to argue that they are trending in that direction, with their most recent EPS print of a negative 70 cents, matching that from January 2021, despite revenue growing more than 300% in those 3 years. The flip side of that, of course, is that Snowflake shares are currently trading at a 55% discount to their January 2021 levels, while their revenue has tripled in the meantime. So their revenues are growing. They haven't reached the level of economy scales as yet. So they're in a good space, though. The AI is a space to be in for the next 7 to 15 years. All right, regarding the stock now. We had a leg down, so a impulse down, a pullback. I have projected a impulse down, but I'm going to shorten that now. For the most part, because Fed Powell is going to put a hold on interest rate hikes towards the fourth quarter of this year, and then in 2024 he's going to start cutting rates, which means that there's going to be more money for the tech companies that need that money for the tremendous growth that a lot of these new up-and-coming startups and unicorns undertake. All right, so the trajectory is the following. Where we see some type of double bottom take place, with the lows coming in at 120. Now you do have this resistance support band on the monthly chart. I can probably shorten that up a little bit at the $200 level. And I'm going to move this to the left just to signify that price has been range bound for the better part of a year. All right, I'm going to go down to the weekly chart. And, when you play the range, you want to play the extremes, right? You short at the top of the range, and you buy at the bottom of the range. So the top is going to be roughly 200, the bottom is going to be roughly 125. Now Snowflake does have earnings coming out on August 24th. And the last two times, price sold off back in May, and then again back in March. You had a gap higher, and then you had a gap lower. So 3 out of 4 previous earnings plays, stock went down. Price is currently below the 200-day moving average, so that's going to serve as resistance. And I'm just trying to see if there's any levels of interest. And I don't see any until you get out of this range, sub 130-ish. If I was a betting man, I would say price is going to sell off based on the last 3 out of 4 earnings report, but who knows? Who knows what's going to happen in this earnings? But the play again is to play the extremes. As you can see in the middle, it's just very, very choppy. But when you get when price goes to extremes, a sharp increase, pullback, increase. Same thing on the top side. Leg down, and the beginnings of a leg down. No reason for that leg down to not continue, at least into earnings. Thanks for watching. Subscribe. Please like the video.